Okay, so I think we can start. We're going to speak about trading NFTs. Before everything, we covered NFTs before, so if you would like to learn the basics of it, we have a couple of videos in our YouTube channel. We're going to record this one as well, so if you cannot attend fully, you can check it there tomorrow. It will be uploaded tomorrow. Also, regarding the questions, you can write them down and I will cover them at the end of the webinar. So my name is Juan Pellicer, research analyst, and we're going to cover in the agenda first, why to trade NFTs, what are the reasons besides profit, is there anything else? We're going to assess a bit the activity of NFTs today. We will check if it's a fad or there is a growing interest. We're going to show some unexpected findings. We did an analysis of lots of new NFT projects, and I think we found some stuff that is really cool. We will show some analytics that are not well known, maybe, and it can make you think about different approaches. Regarding strategies, we will show how to think about risk, for example, what to value if you are thinking of minting or buying in a secondary market. And at the end, we're going to show some links that I think that are useful if you want to check some advanced stuff, as well as, for example, find new NFT drops. So, well, first, a quick update regarding into a blog. Since our last webinar, we have added analytics from Algorand. You guys have been asking us a lot about L1 analytics. So in this case, more than 50 indicators. If you want to check them out, they are free. You can enter here in this link and check it out. We have 7 categories, all of our usual, like financial, network, ownership, exchanges, and more. So check them out. Regarding new customers, we just launched currency.com. We have a neat panel here on the right. We're showing some of our analytics, like price correlation with Bitcoin, holders making money at each price range, transactions greater than 100K for institutional adoption, for example. Other launches have been Greenquora, BlockPress, or Digital Exchange.io. Well, before everything, why trade NFTs? This is not financial advice. We just hope to educate and make you think and learn about different approaches. So we just hope that you find them useful. And as always, do your own research. Well, there's a component for NFTs that it goes beyond profit. Many people find communities on them. They have a social component, and this makes them really hard to value. So I really acknowledge them. Some people even say that they have an emotional attachment to their NFT when they put it on social media. Also, people say that they find them more fun to trade than to trade with cryptocurrencies, because it's not only checking a ticker and the price increasing or decreasing. So it's more similar maybe to trading cards in real life. So also many of them have artistic value, which makes them really, really hard to value and to find the real price that they should have. Well, it's profitable. First, it's super high risk marketplace. Why? Because it's an illiquid market. It's not like a normal cryptocurrency where you can go to an exchange and sell it when you want, because there is always going to be someone that is going to buy, market makers. So you have to think that to find a seller, if you want to sell, you have to find a seller. So it can happen that maybe you want to sell your NFTs and you cannot find anyone that is interested in it. Many people think that they give high profits, but we will show later that this is only for few of them. Assessing a bit the activity of today, I really like this chart. It's showing the Google trends of different terms: NFT, Ethereum, blockchain, Dogecoin, DeFi. We can see that nowadays the interest, the search terms for NFT have crossed is in blue, have crossed Dogecoin in green, or even Ethereum on red is in all-time high. So we could say that the interest over NFTs could easily be on all-time high right now. But everyone's checking all the time, how is OpenSea, the activity on OpenSea, is it decreasing, is the fad is over? So we believe that one of these reasons could be due to the fact that the gas prices on Ethereum have increased a lot. And definitely this is one of the reasons. Here we have one of our charts of average transaction fees on Ethereum. We have seen since summer that they have increased it a lot. So in this case, we can see that it was below $10. Now is almost 40. So this certainly is the case. But if we check with other blockchains, we can see that, for example, Solana, where there is a lot of NFT trading as well, the two biggest marketplaces, which is Magic Eden and Solana, they also have decreased in volume, users, and transactions. So it's definitely not something that is only happening on Ethereum as well. Well, regarding what we found, we did an analysis of over 100 NFT collections that were minted during October. We had to put some filtering criteria because there were so many new NFT drops every day, more than 30. So what we did at the end was to filter and only analyze those collections that had over 5,000 followers in Discord, in Twitter, and users on Discord. We only analyze Ethereum and the marketplaces, OpenSea and Rblocks. And what we found is that few collections mint completely besides being popular. We can see here a chart where we are charting all of the collections that we analyze. And on green, there are those that have completely sold out because they have minted all of the supply. And here on red, we have a square where there are many collections that are not being even 25% minted. And this can be a problem because try to think that if someone is coming to a new collection and is willing to buy, they might find more interesting to buy, to try to mint one and get a rare one than to buy your discounted NFT. So it's safe to assume that you might incur in a loss if you are trying to sell a piece from a collection that has not been fully minted. The cause for this is because I think that many collections put either a high supply or high prices, and they cannot adapt to the demand that there is for their collection. Well, regarding the returns, not many of them were profitable. We can see that few of them, even those that were minted, few of them were profitable. For those wondering, this huge spike is Kaiju Kings. We modeled two scenarios, one with minimum gas, another with maximum gas. Since it's Ethereum, it really impacts on the returns. And we can see that most of the NFT projects that were launching on October failed, just checking the price appreciation of it. No? Well, fees, speaking about fees, they play an important role, not only on Ethereum, but also the fees from the marketplaces. Here are two examples. OpenSea, they have three different fees. One is the selling fee. When you sell a piece, you have to pay 2.5% of it. There are royalties as well that are based per each collection. They are variable. And there's also an initiation fee that if you trade a lot, maybe is negligible, but this is an Ethereum transaction fee, so also have to be taken into account. Ethereum, in the case that we showed before, this slide, we used the mean gas $80 and maximum 200. This was 1 month ago. Maybe today we'll have to increase it a bit. But yeah, each marketplace has a different fee structure, and it's worth taking time to understand it and model it to see how are the real profits that you're getting. It's curious how some marketplaces don't even charge a fee at all, while others charge fee for listing as well. So the service fee also varies a lot. it's something to take into account and to plug into your models if you are going to trade a lot. Well, speaking of rarity, it's not as simple as computing a rank. It goes beyond that. There are many different methodologies. This screenshot is from Rarity Tools, the most famous, I think, the most famous ranking websites for rarity. So if you change the methodology from one to the other, we can see that the ranks of rarity are really, really different. If you want to learn more about how to calculate those, the blog of Rarity have good articles about how to do it. It's really, really interesting because, for example, how would you value an NFT that most of their attributes are completely common, but it has only one attribute that is the only one that it has. So definitely is something that needs to be taken into account. Well, regarding to measure demand, many people just like to check if a collection before minting has a lot of followers or a lot of users on Discord. This really doesn't work at all. It's full of projects everywhere that they are faking the followers, they are faking the users on Discord. Sometimes you can see a red flag like comparing both followers. It doesn't make any sense that they have so many more followers on Discord, for example. What could be a better metric to track the organic activity? If there are interactions on Twitter, if there is engagement on Discord, those cannot be measured directly, but they give a better metric. Well, the successful collection take a long time to appreciate. This is an example, a chart, a historical chart of a collection called Cool Cats. And we can see that like it took to appreciate 4 times several months. It's not anything, you can see many projects and there is usually no projects that appreciate in super fast and they maintain its value. Usually it takes some months. In the opposite hand, projects that are not successful and do not mint completely, or they lose demand after the mint day, they usually have a period where in 2 days the price starts to decrease a lot. No, so this is one could learn from here that if we enter in a collection that is not much successful, it might be better to sell fast and to try to hold over time because there is a few probabilities that it gets value. Well, regarding art blocks, it's not an easy game at all. We analyze all the art blocks drops that there were during October. Some of them did not even fully mint. We took this data 7 days after the mint day. For sure, maybe some of them now they are fully minted, but at that point they were not. And if we compare the average mint price of everyone that minted that collection to the floor price in that moment after 1 week, we saw that most of them, the price decreased, and there were few that were successful. So we're not considering rarity here or anything like that, but it's not easy to be profitable in our blocks right now, it seems. Well, regarding analytics, this is analytic focused on the primary market, which is focusing on before the minting happens. Is a way to measure the offer in the market for a collection. So people sometimes just check how many of the supply is offered or what is the price. I think that we can agree that we can calculate a market cap if the collection is completely minted. We will just multiply minting price times supply. We could check that most of them are below 5 million of minting market cap. There are some of them that are over that, and this means that they are potentially mispriced and they are achieving for a super high price or high supply or both, or could be some collection that is going to be there is a lot of expectations and they know it and they put the prices higher. It happened, for example, with Metaverse. Okay, regarding secondary market, which means after the minting has happened and the NFTs are on the on the marketplace. This is my favorite one. It's a way to measure the supply that there is on the marketplace. So this is an historical chart where this is showing the total supply of the NFTs in this collection and how many of them are listed. And if we see if there is a constant decrease on the number of NFTs that are listed, we can expect that there could be a supply shock if more demand comes and they want to buy. Also, I like a lot this indicator because it can be checked super fast. Maybe not historically in a chart because it's hard to get, but in the same page of the collection on the marketplace, you can go and check the total supply of the total number of NFTs that have been minted and how many of them are now listed to sell. In my experience, everything below 20% seems to be a healthy indicator that the holders of these NFTs are looking for the long term and they're not willing to sell. So there is more probability that the price increases. Well, to measure demand, a lot of people also like to use the volume traded for a collection. I don't think that is so useful. It can be a bit misleading. For example, here we have a chart, historical chart. On yellow, the floor price. In this case, the collection is for days. And here we can see the accumulated volume for each day. We can see that at some point there was a decrease on volume, but still the price did not drop that much. And this kind of makes sense because if the price increases, the pieces become less affordable. So I think it's expected that there is going to be less volume, but this doesn't mean that the price has to drop. Another good indicator that I like to measure interest, that is, I think it's a leading indicator. It's kind of obvious, but I don't see anyone checking it. Is the number of offers that the marketplace is getting on a collection, okay? In this case, this is a CryptoPunks chart. And we could see that there were some spikes on the number of offers that were betting on NFTs of the collection. And this serve as a leading indicator of price appreciation. In blue is the floor price over time. And we could see when these spikes happen, then the price after increase it. This is also logical because if someone is willing to buy one of these pieces that are super expensive, maybe you try first to bid a bit low, to try to send some offers to some pieces, and if they don't get accepted, then you buy at market, no? So this is only possible on the marketplaces where you can offer. For example, in Solana, I don't think there is any that you can send offers. So also it has the con that it can be spoofed because there are some bots that are trying to bid way below the floor price to see if any seller is confused and accepts the offer. But I think that this will be part of this noise, and these spikes are real demand. This chart, this indicator is a bit advanced, maybe. It's trying to quantify momentum. This is loot collection charted over time. What we did is chart the number of transactions, and we separated them in different price buckets. So first, the bright ones are the ones that are cheaper, and the darker ones are those that are more expensive. And we can see how at the start, most of the transactions are cheap, and suddenly the price starts to appreciate a lot. There are lots of transactions. Some people even start to pay more than 50 ETH for a piece of loot. And over time, it's expected that the reduction of transactions happens, but it would be healthier if it would have maintained a bit this high number of transactions. But over time, we saw that the majority of the transactions were way lower. So it's a thing that the interest has faded a lot in this collection, for example. Well, regarding rarity, I think this is the most useful chart to if you want to buy a rare piece. We can see here charted the rankings from 0 being the most rare of NFT of one collection to 5,000 that will be the least rare. And the y-axis, we can see the prices. We can see how until from the ranks 500 to 5,000, they mostly have the same price, but at some point, the price starts to increase exponentially, no? So we can see that they are following a kind of a curve, and those pieces that are under that curve could be considered that maybe they are mispriced. We are not counting that maybe it's a combination of an NFT that is not much appealing or something. But if we just base a buy considering the rarity, this could certainly be mispriced. Also, we can learn from this that if we really like a collection and we want to bet it on the long term, the pieces that are going to have most appreciation, it's logical that they will be ones on the top 50, top 20, top 10. So, yeah. Let's come back a bit to our blocks. For those that are not familiar with how it works, the minting process today in our blocks it's using Dutch actions. This means that they have a set price. This chart here is showing it. This is the starting price, and periodically this price decreases, and people can start to mint, to buy at the price that they feel comfortable. So what usually happens is that at the end of it starts to decrease. Some people start to buy. The supply that is available starts to decrease. At some point, the FOMO kicks in. Everyone tries to buy at the cheaper price. It has happened many times that for trying to save 0.25 ETH, you get overpaying because the gas fees start to increase a lot. So definitely trying to not be greedy in that regard, and not try to wait until few of the supply is available, because they run super fast as long as they cross the middle point or 2/3 of the supply. Also, it's worth keeping in mind the gas prices that are at that time. If you are buying around here, sometimes there are gas spikes related to other events, and you could end overpaying if you don't keep into account what is the average gas price in that moment. So we could see here two examples where some people overpaid a bit, like 0.7 ETH, most likely for a gas spike. Well, thinking of strategies, first, I think that we have to understand risk and returns, okay? In the case of the recently minted collections, we can agree that they have higher risk, but they could yield higher returns. In the case of renowned collection, that they have been steadily in the top rankings, I think the returns could be lower, but also the risk that they appreciate is also lower. So thinking of strategies in the short term, which I mean in the process of minting and around minting, we could find some time life cycle here, where there are some nice time windows where one could buy. For example, this would be the start of a project. Usually nowadays, most projects have a whitelist. For those that are fast and enter in Discord or Twitter fast, they usually are granted with a piece that can be minted without having to deal with the public minting. So it pays off as everything in crypto to be early. Then there is the minting process. And then there is a period between the minting process and the listing on the marketplace, where it starts to be some unofficial sales, where some people start to offer sales on Discord mostly. This super high is really, really risky. You can be scammed easily, and unless you have out of experience, I would not recommend it. But sometimes people are selling really rare pieces for not much more than what was the minting price. So if you know how to use an escrow, if you know how to spot if a NFT is genuine, checking the contract and everything, it may be a suitable strategy, but definitely not recommended. Then comes the listing on the marketplace, and there is a gap between the listing on the marketplace and the release of the rarity rank. So it's very common that as soon as the collection is listed on the marketplace, you could enter and check different NFTs and check the attribute that they have, and consider that some of them might have a high rank on the rarity and could be bought for cheap, since and the seller doesn't know really the price or the rank of that piece. Well, this is just some ideas for those that would like to play in the short term, of course, higher risk. Well, what are the attributes or qualities that pay off in this scenario of the minting process and everything? Well, it's spread discovery, to have connections, to know where to look, where there are the new projects being launched, trying to enter early. It's really, really high time demanding. You have to be all the time checking new announcements of these new collections. Definitely you will be taking risks. So I don't think that is a strategy that is suited for new people that are entering the space, but I think that we can all learn about it. Regarding secondary markets, more thinking on the long term, appreciation on collections that will do good on the long term. Here, maybe some stuff that might be more interesting to check. It will be stuff like the deliverables, the roadmap of the project. If it's a game, what are they going to deliver? What are the utility of the NFTs? Also, the community behind it. It's getting traction. There are, for example, with profile pictures, there is social recognition. People are putting them as photo profiles. Something that it will be more interesting to check for appreciation in the long term. Also, some of the indicators that we show and others can be good to take into the decision if you are willing to buy in the long term. Well, this is a framework that I found online. I think, well, it's interesting. It tries to mimic a bit of a fundamental analysis, no? It's about giving a score to different attributes like the team behind an NFT collection, investors, the utility of the NFTs are going to have, what is the roadmap, how is the community. I think what we can learn from this is that we can value different attributes differently. For me, maybe the utility is one of the most important besides the investors. So it can help you, make you think a bit more about how do you value a project that you are willing to buy, maybe in the secondary market, or it can be used this as well for minting process for the primary market. No? Sources here in case that you want to check out for everything that we are posting. Well, some links that I found useful. These ones are going to be written down in the description of the video, so you will be able to check them there tomorrow. Well, to find new projects, I think these three are the most popular ones. Next Drop, NFT calendar, non-fungi, they are super useful. They list tons of projects. They let you filter by chain. They give you directly the links to the websites, to Twitter, to Discord. Regarding Rarity, the most famous one is Rarity Tools. It's mostly for Ethereum, I think. Then for Solana, it's more used Howler. Maybe for Arblox, it's a super nice website, Rarity Guide. Very nice to check it out as well. Analytics, there are some interesting ones. One more for collections, one more for marketplaces. It depends on which blockchain you are using. There are way more than these ones. I just check here the ones that I like. For marketplaces, that Radar, for collections, CryptoSlams, Anafloor, to check floor prices, which is not easy at all in this case, only for OpenSea. But the Nifty lists all the connections as well. It's quite nice. Well, looking at the future, the thing I'm most excited about is the Coinbase release of the new marketplace. I think there is a barrier for many users to start to use DeFi, to open a MetaMask wallet is hard for many people, and they feel more comfortable using centralized exchanges. So the fact that there are over 2 million of registrations on the whitelist of the Coinbase marketplace is it all. Regarding gaming, well, there are news every week of new funds of gaming and NFTs. I think that everything started, or people realized a lot with Axie Infinity. We did a super deep dive of Axie Infinity, checking all the economies of it. It's in our Medium. Regarding digital art, the actions at Sotheby's, they even have a category called Sotheby's Metaverse, where they are selling, auctioning all the time NFTs, and more digital artists are entering the space every day. Well, lastly, maybe more in the medium long term, the metaverse. Everyone knows about the Facebook rebranding. Also, Microsoft is trying to implement something with their Teams product. We will see how it goes. Also, the Centraland is in the mouth of everyone now as well. We have both analytics in our website for the Centraland and Axie Infinity, so you can check them out there as well. Well, next webinar on December 15, staking a multi-chain world. We'll speak about what are the yields for staking every chain, what does liquidity staking, how can you earn more yield by staking, how it works. If you're interested, you should definitely check it out as well. Okay, so I'm going to check a bit the questions now. I'll try to reply to as many as I can. If we don't have time to reply to them, you have here my Twitter handle or email. You could contact me there without any problem, and we can continue speaking about it. Okay, so regarding the questions. Okay. Yes, the slides. I forgot to say the slides will be shared as well. Okay, let's see this question. Have you seen any successful DAO-led NFT collections? Does decentralization aspects help or make collections more successful? Well, lots of DAOs have launched collections. The fact is that many collections do not start as a DAO, but as soon as they start to gain traction, they transition to a DAO. Well, many of them I would consider, for example, well, Solana Monkey Business is one of the most famous. Bored Apes as well. I think that these ones can be considered DAOs for sure. And if it helps decentralization, I don't know in which aspect. I mean, as long as we are using a blockchain that is decentralized, I would say that the collection is decentralized. Maybe you can specify more. What do you mean by that? Why don't you think that social sentiment is a good indicator? Public opinion is a big factor that moves the market. Yes, maybe I did not write it well, but by social sentiment, of course, it can be a great indicator. I was referring to the fact that people just check how many followers a collection has, and this is misleading. But of course, social sentiment, if the people are interacting with it, is super useful. Do you think that the NFT market is in a bubble right now? The fact that over several years there have been like bubbles where the interest spikes and then it cools off a bit and then it starts to spike again until now even bigger. So I don't think that is going to be, that is not a bubble, because I think that many people find them easier to trade and are more interested on trading digital collectibles and to trade a ticker with a price. So I think that there is still a lot of people that want to enter, but they don't have an easy way to trade NFTs. So we will see how it goes with the exchanges, marketplaces. What's your advice to anyone who already has experience with trading crypto but is thinking of getting into NFTs? Well, I would say that just try them out. Now is really easy. There are some collections that are not so expensive. It's a fun process, and also, yeah, some chains don't have high gas fees. It's just a matter of trying it out to find maybe a collection that you like, and try to see how it goes. Of course, do your own research. It's super risky. You might lose all your money, so keep it into account. What do you think of good quality copycat collections? Yeah, well, they're funny. Mutant apes, for example, Picasso banks. I think they are funny, but still, the original breeds, I think that is over time they are going to be more valuable. But I like to see the creativity of the people suddenly to create a new derivative of a collection. What's Luca is asking, what's the dynamic between NFT hype and ETH appreciation periods? For sure, there is some correlation. In the case of NFT hypes, before it was mainly on Ethereum, and to buy these NFT collections, you need ETH. So it's quite clear that if someone is coming, is going to buy ETH to buy NFTs, and the price can appreciate. So I would say that there is some correlation. Yes. What's the best place for creating NFTs? Well, it would be a good idea to check different marketplaces. Depending on gas fees, maybe Ethereum is a bit expensive, but I think that the easiest one to create NFTs right now are the marketplaces on Ethereum. Do I find most of the analytics shown in the slides on your platform? We're preparing an NFT launch. It's not ready yet, but will be soon. So we will update in our social media as always. So, what's your view on digital land as an investment? Well, it's interesting as long as it's a finite resource that is not going to be amplified. I would say that could be an interesting investment. But it's also risky as well. Also risky because at any time maybe they think that they want to create more land, so you will get diluted there. But seeing how the Central is going with the sales of land for millions of euros, maybe the market is a bit hot now, but it's interesting to think about it. Can celebrity endorsements or hype rates too much, like Mechaverse and Stoner Cats? The spreads tend to have a high mint price. Yes, one has to take care of those that stuff. There is a lot of endorsement many times. I will not. I suggest you to not follow advice from influencers and people that, of course, they can mint. They have pieces minted, or they have an economical incentive. Okay, another question. What are some advices in terms of managing the risk with NFTs? And can you trade NFTs on leverage? Regarding leverage, I don't think it's possible yet. So there are some indexes of NFTs where you can trade, but maybe there are some projects around there working on it. But I don't think that it's possible either to trade on leverage or to short them, not for the time being. And for managing the risks, well, I think that position sizing, risk management is super important with everything in trading. You have to expect that you might lose everything that you put into a collection easily. So you have to trade accordingly, in my opinion. But definitely, I would recommend to read on position sizing, risk management. Another question from Luca. Gas fees are a big barrier to NFT market growth. Well, it depends. If all the market of NFTs is concentrated in blockchains that have high gas, then it's going to be a barrier. But if the market starts to grow in centralized exchanges or in blockchains that are not don't have high high gas fees, then I don't think that it can limit much the growth. Okay, I think we're going to leave it here, guys. Thank you everyone for coming in, and we'll see you in the next webinar. Thank you very much.